Hello guys, this is fairbinaryoptions.com, and I would like to have a little discussion on the euro and the US dollar chart here. This is the 4-hour chart, but the same move is visible on the daily or on the 1-hour chart as well. So I would like to have a little discussion based on this pattern that forms from the highs to the lows, as everybody in this world probably is looking at this being a falling wedge, with this being the wedge that has just been broken to the upside. Well, it may or it may not be true, but I would say that most likely it is not the case for this to be right, as first of all it is visible. Second of all, Friday's closing suggests this is not necessarily true. So if that is the case, what should we look for heading into next week's trading? Well, if you really want to look for a wedge, I will look for a wedge from here, like this, and to here. So this to be the first wave here, then the second, the third, the fourth, and the fifth. So this should be the wedge that I'm interested in, like this, and from here to here. It is more proportionate, it respects all the rules of it. After this one has been broken like this, then the price rejected, but as you can see, it rejects first of all in a corrective fashion, with this being almost equal, and second of all, it's not breaking the previous highs here. And even if the previous highs are being broken, actually the highs that we should look at, or the invalidation on any move to the downside, should be this one here, and this goes something 37.72, way higher than the current levels. What I'm looking here, I'm looking for a possible a move now that should go well below these lows here, and that was 35.86. Not, let's say, this is not by chance that market hesitated at those levels for so much time all this previous week. But what I would really like to do here, after the market breaks these lows here, because I would say that they will broke these lows, what I would like to say to do is to go and buy call options around the 135 area. So this would be a nice place to go and buy call options. The reason for that is that I suspect a possible complex correction here in the form of a triple combination minimum, and this should be the end of an X wave. This should be the end, or an intervening X wave. This should be the end of yet another X wave here. They are almost the same in terms of the time taken for them to form, and now we should see something like a contracting triangle to be formed on the downside, like A, B, C, and then the D, and then the E, and then for price to move higher. But that's another story. So what I would like to do here is, every time price comes into this area here, I would like to buy call options, and starting with the opening on Monday, normally to look for the downside as well. So favoring call options from this moment of time for next week. I would say that until Thursday and Friday, this would be the case to buy call options, as on Thursday you'll have the ECB and we'll have probably a spike to the downside depending what these guys are saying, and on Friday we'll have the non-farm payrolls, and on a positive surprise then the US dollar Japanese yen should move to the upside, and the euro US dollar to try to make a new low. Nevertheless, if there is a wedge here, then this is the wedge to look for or to look at, and not the one that everybody in this world is looking. Well, this is the scenario on the euro and the US dollar. So I would like to buy from lower values, and you might say, alright, so why not selling from current values? Wait, not selling from current values because the expiration date is a bit tricky. Here, for these call options here, I would choose expiration date end of week. If price goes into this area before the ECB, I would still choose end of week expiration date. Well, Thank you very much for being here. This is fairbinaryoptions.com, and as you very well know, all these analyses and recommendations are possible due to the help of our sponsor here, Lion Eye. Bye bye.